Okay, guys, so today we're going to be going over a little bit of basic Forex stuff as requested. Then we're going to cover risk-reward ratios, and then tomorrow we're finally going to get to money management. Without risk-reward ratios, it's kind of pointless to be dicking around with money management, as you need to understand the risk-reward ratio first. Okay, so let's start off first with trading axis plus Forex. What I'm working on is, you can see the little X's. They're actually not going to be there once it's completed. This is for visual for me. I don't have the filters in because you can see these are giving you alerts on the wrong way. This is one the right way, this is one the right way, and this one is there. So the first step was just to get it to pop on swing high, swing lows, which it's close. I'm not going to get it perfect. Fuck it, it's good enough for now. The next thing is going to be applying it to when it's above the slow, medium, and fast channel. Once I get that done, then I'll give it out to the group, but I'm going to test it as is for a few more days. The issue I was having is since Rinko bars are not they're not time-based, they're pip-based, I was getting, it would pop, and then it would draw the X, and then it would give me 30,000 alerts while that candle was forming, and then it would disappear. So I finally got it stable where it doesn't disappear, and I only get one alert per bar now. Remember, Rinkos are bars and candles are candles. Candles are time-based, Rinko is pip-based, and we're looking at 3 pips a bar. So that's working. Next step, once I confirm that it's working and I don't get any more weird alerts, and it looks like for the most part it's running the way it should, then I'm going to apply it so it only alerts when it is on not a valid setup, because this isn't for setups, it's just, how many of you have been watching and you jump to the chart and Rinko's already formed 6 candles because it was a quick move? This is going to be to help, just in case you're not watching the chart, to get you back to the chart, to say, okay, check the chart out. Same basis as TA with the bins. It's just to get you to the chart. I mean, for some of these, they might be decent trades, and some of them are not. I'll show you real quick. I hope so, man. It was a bitch. I've been working on it since I had actually given up on it, and a friend of mine last night gave me a couple hints on coding it. But hopefully it works. I think I have it working, so it's not giving the multiple alerts. It's still common sense, though, guys. Like, this is an upwards one, but we're on a downward slope, so we'd ignore. This is a downwards one, so it wouldn't have popped. This is an upwards one, but it depending what the other chart looks like. We still want to confirm to the other chart. But I'll be honest, I've been missing too many trades. I mean, like for something like this, I'm flipping around. This was a quick move up. By the time I get here, it's already up to here, and I'm like, shit. So this is helping me so far. It has been helping me it has been helping me not miss checking a chart when there's a possible entry. Let's put it that way. It's not telling you there's an entry, but it is saying, hey, watch the chart because there might be an entry coming up. So all that's left, like I said, is to apply the filters so that when it's above the slow, medium, and fast cloud, that it only alerts that way. So that way we don't get these opposite direction alerts that we're showing like here and here. Alright, so that is what I've been working on there. And hopefully by the end of next week it'll be ready. Again, like I said, it is helping me not miss near as many trades. I'm liking it. I just suck at coding, but I didn't want to give this one to a coder because every time I tell them that it's Rinko, they all get butthurt, and it's hard to test it when working with a coder because you have to put it on the chart and wait and wait and wait. So just this, in this case, it was easier for me to do, even though I hated doing it. I might get somebody to do the last portion, depending if this works, just to say that the candle has to be above all 3. Because that might save me some time. It depends. If I'm not too busy this weekend and my daughter goes with her aunt, then I'll have some time to work on it. The only problem there is Rinko has to be live charts because I can't simulate these. There's no back testing on Rinko. I have to have a live. So every time I change code, I got to wait for the alert to pop and see if it worked or not. I can't just throw it on a back tester and run it through real quick. So that's what's taking so long with it. All right, so we were going to talk about Forex. Let's go over to here. So some of the things with Forex, guys, since I've done this and I realized, because, well, it was brought to my attention that a lot of y'all don't really understand Forex compared to binary options. We're going to basically sum it up and talk about the big differences in the two. Number one, binary options is time-based. So if you enter here and your expiry is 5 minutes later, this is your exit. You have no option on exit unless you have one of those brokers that lets you double down, and which be a martingale, which is stupid. So we don't want to do that. Forex is not time-based. It is you enter here and you get out when you think it's done. So difficulty-wise, and this is why I recommend everyone get your binary options trading down first. Get yourself to that 60% ITM, and we're going to come into that in a minute why that's still important and how Forex can be a little bit more forgiving, but there is something that has to be accomplished for Forex to be more forgiving. But so that pretty much sums it up on the two differences. Binary options, time-based. Forex is not time-based. Binary options, you only have to worry about an entry, where in Forex, you can nail the entry, but then you have to worry about the exit. If you cannot master the exit, you make zero money. That's the big kicker, because I see a lot of people that in the group have already jumped into Forex, and they are doing, to put it blunt, fucking awesome, but their exits are screwed up. So they're not there yet. It takes practice, just like with bins. Bins will help you master the entry or the concept of entry, and then Forex you're going to have to work on that exit and sitting there staring at a trade that, I don't know, let's say I took this to go up and all of a sudden it heads down on me, and not say, oh shit, I'm getting out, or as soon as it breaks even, getting out. I've had a couple people tell me their biggest issue, which I had it too, was sitting there watch a trade go, especially when the trade's in the money here, your target's up here, and then the candle drops and it never hits your target, and you get nervous and you don't let the trade complete. We'll be getting into a few things you can do to help alleviate that stress, and hopefully it will help some of you, because some of you say that this is just a giant freaking mess for them. Not like a giant mess, but it's stressful for them watching the trades run. Like, they're really stressing out watching the trades run. I had one person told me that she's getting up and leaving the room. She opens the trade, then she leaves the room because she can't stand to watch the trades. And she's only doing one trade at a time, so because she wants to sit there and watch it. With bins, it's not that bad. Get in, get out, so you're wasting 5 minutes of your life. But you can have a trade run for an hour, and she said she'll take a trade, come back, check the charts in 15 minutes or 10 minutes, or if she hears an alert for binary options. So I'm trying to cover some of the things you're going to find difficult, hopefully, that people have been telling me about, and then we'll continue. But the mindset is a little bit different than binary options, but it is more forgiving, and we're going to get into that in a minute. So let's talk about how do you place trades. There's multiple ways. I gave you the quick deal, which is this. It's a script that runs. And I'm going to give you a little bit of a hint. This was to simplify things for y'all. I'll show you how I trade here in a bit during the video too, but you set your take profit and stop loss here. We're going to talk about what take profit and stop loss is. Take profit and stop loss is too. Okay, so first let's talk about just a take profit. We're going to do a 10 pips. Pips are also referred to as points. It basically means its price, how many pips it moves. You'll see it referred to as pips and points. They're basically about the same thing. Okay, so let's see what happens then. We're going to take a trade for 10 pips and hit buy. Up here, this is what's called your take profit. What this means is this is your goal. For this trade, you think price is going to come up to here. And hello, whoever that was. Okay, so quite simply, it's one way to enter the trade, and that means from here to here, it's 10 pips. That's your target. That's where you think price is going to hit. I'm going to go slow. If there's any questions on it, just stop me. Okay, so to close a trade, I'm just going to go ahead and close it. I'm going to right-click it and close. Except I'm doing one-click trading when I do that, so I'll explain that too. It's one of the other ways you can do it. Okay, so that's closed. All that was quite simple. I'm just showing what a take profit is. Now I'm going to do a take profit with a stop loss on it. Okay, so we do it again. Buy. Okay, so now what we see on the chart, there's a red line at the top, and if you look to the left on your charts, it says TP, which is take profit. Down at the bottom, stop loss. So what this means right now is I think price is going to move up 10 pips, but if it drops 10 pips, then the trade closes. That's my protection. Where with binary options, you put in $100 and you can't lose more than that. With Forex, you have to put in a stop loss to tell it how much you're willing to lose. So let's say this is 10 pips on a 1 pip trade. This is basically, if price went up here, it's $100. If price goes down to here, I lose $100. Okay, so that's take profit, stop loss covered. Any questions on take profit, stop loss before I move on to the next portion, which is going to be risk reward? And we're going to talk a little bit about risk reward and how it's different from binary options. How it's, I guess you could say, better in Forex if you do it properly, but the only way it is better is if you let the trade complete. So, any questions before we move on? Does everyone understand what a take profit and stop loss is? I know some of you are like, Jesus, how can you not know that? Some people just don't know the terminology. Binary options doesn't have these, so I don't expect everybody to know it. Take profit is just your goal. Where do you set the amount per pip? There is no amount per pip. Tomorrow when we get into money management, we're getting into that. There's a little chart. You enter how much a pip is, and it'll tell you how much money a pip is worth for the pair. 1 pip, let's say on Euro, USD, 1 pip could be worth $1 at 0.1 lots. And if you go to cable, 1 pip could be worth $1.50 at 0.1 lots. It varies. So it's not across the board. It depends on the currency pair. There is a calculator for it. I know this sounds complicated, but you'll get the hang of it eventually. There is a little bit more thought that goes into placing these trades. You can use a general rule of thumb on these sizes, but we'll get into that tomorrow. Again, today we're just going to do risk reward. So I'll answer your questions, but I'm not going to get into detail on it. Tomorrow we're going to show trade size calculators. We're going to show a few other things. But today we're going to keep it simple and get risk reward in there. That way when I post the video up, other people in the group will get a chance to look at it. I'll get all the questions out of the way. And then tomorrow I don't get a dumb question like what's a stop loss or what's a risk reward. I can just focus on money management. Because money management does get a bit more in-depth. Okay, so I'm assuming that was the only question. Let's go ahead and close this then. Okay, so I used this. We're going to show a couple different ways to place trades, and then we'll get into risk reward. Okay, so close. What I was doing then is using a script called Quick Deal. This was downloaded from Trader's Way, even though I'm using Pepperstone. This was downloaded, and it is a script. The other way you can enter a trade is up here at the top left, and this is called one click. Now, let's just drop it back down. I don't know how much is in this demo account. Okay, same thing here. Now watch the difference here. I'm going to just hit buy. Okay, now what's missing? There's no take profit or stop loss by using this method. So this is why I had y'all doing this way. For the guys in my group, this is why you were using this, because take profit and stop loss needs to be in there. Let's say you enter this trade, news hits, and all of a sudden it drops 50 pips and it wipes your account. You had no, and by the time you see it dropping, you're over here, close. You get it closed, and price already ends up down here. If your take profit and stop loss, as a rule of thumb, always are put in when the order is placed, not after. When the order is placed, take profit and stop loss is set. For one, it protects you against a spike. Every now and then, just like when the Queen spoke this morning. I mean, look at what Cable did this morning. This was Cable when the Queen spoke. Since she spoke, it's just been going up. If I would have gotten into a sell on Cable, I would have gotten my ass handed to me if I wouldn't have been using it. Because literally in 10 minutes, it shot up about, not even 10 minutes. Yeah, about 10 minutes, it shot up about 30 pips. Okay, so this is the second way you can place trades. It's called one-click trading. Sometimes if if you don't enable it, it'll have a pop-up, but it's right here. One-click trading's clicked. It wasn't, because if you were paying attention earlier, when I tried to cancel an order, it told me you need to enable one-click. Okay, so how else can we do orders? There is this new order, and this is getting really, really yucky into it. Set by market's what I hit, and it created a sell. Nothing in there, just a sell. So let's do close again. It's similar to this, except I'm using the new order button. Okay, this one has more information in it. I'm not going to get too much into this because the way that I'm teaching everyone in the room is to use quick deal because it makes it easier. But you can do pending orders, market execution. A pending order just means that the order can be put above or below price and you're waiting on price to hit it before an order is opened. So for instance, if I do I'm going to go into trading and do a buy stop. Now this is not an open order. If price hits it, then it's going to buy. The way I deleted that is I just double clicked it and it brought up the window. So if I go down here, again I can put in a pending order for a sell. So here's my sell stop. If price hits it, it opens up a sell. Want to get rid of it? Double click it, delete. So now we've covered 1, 2, 3 ways to do orders. There's actual orders real time when you hit buy and it puts it in. There's pending orders, which is right click on the chart is the easiest way to do these, and you can do a buy stop or a sell limit. If it hits, for instance, if I do a sell up here, it means when price hits it that it would sell. So you can do whatever you want on the chart. It's not limited. So if you think if price is going to hit here, then reverse down, you could do that. It's not limited. Let's see. Other tools when related to open trades. So let's take a look here. Is what I hit was the button up here that says terminal. It's Control T. So here's the trade that's open right now. You can see that and we'll cover this. This is the order number. This is the time the trade was placed. It was a buy. This is the size, 0.01. This is the symbol, USD/JPY. This is the price that I got in it at. My stop loss is 109.500, which is down here. My take profit's 109.700, which is up here. And this is the current price. This is the commission. Now, when you're trading with a broker's, eventually, depending on your skill, right now I'm teaching quick deal. Once y'all understand money management, it'll go beyond that. I'm giving the basic setups because I want people to ease into this and learn it as they go. And when they're ready, then I will have a complete video. Money management is going to teach you money management, but there's a part 4 to the Trading Access plus Forex that is going to show you exactly how I trade it. And I don't use quick deal. I'll show you today how I do it towards the end of the video. Okay, so I can't talk. Or I'll save that for tomorrow. I don't want to confuse anyone. We'll save it when once money management's been explained, I'll show you how I trade because I don't want people to get the wrong idea. Alright, so from this panel down here, what can we do with trades? You can close them with the little X right here. So if you need to get out of a trade, you can just hit X. Like I said, commission. There is a commission on every trade. It's going to vary per broker, and there's different types of brokers. We'll get into that a little bit more too. There's ECN, VAR. Like this is an ECN account, and I don't have a VAR account available, but I'll show the difference tomorrow. I'll open up a small VAR account so we can see it. But basically, any Forex trade that you place, as soon as you open it, you're already going to be in the hole. The commission's going to put you in the hole, so price has to move your direction before it gets you out of that hole. So whenever you place a Forex trade, you automatically start at a little bit negative, depending on the amount of commission, or the spread if you're using a VAR. And we'll get more into that later. Just the important thing to take away from here is any Forex trade starts in the negative due to either commission or your broker using spread as the commission. So you need to keep that in mind. Alright. So next, we want to look at risk reward. So I'm going to close this. I'm going to close this. Risk reward is, in Forex, the bare minimum you're ever going to do is a 1-to-1 risk reward. Now, what does that mean? I'll show you. This trade that I just set up is a risk-reward ratio of 1 to 1. What that means is I'm willing... It's not anymore, but... What it means is I'm willing to... And we're going to base this off dollars. I'm willing to lose $1. With a risk-reward ratio of 1 to 1, if I can either win $1 or lose $1. There is no... it's a little bit bigger because I pushed it. Okay, so in Forex, your bare minimum you're ever going to do is a risk-reward ratio of 1 to 1. So what does that translate to, and how many trades do you need? Markets World finally put out an email about being under attack. Okay, sorry, off the subject. Let's get back to it. So if your risk-reward ratio is 1 to 1, how many, and let's back it up to like a binary options, how many ITMs do you have to get? We'll see if anyone gets it. So what we're saying is 1 to 1 risk-reward ratio. What is your percentage of trades you have to get right to break even? Correct, it's 50%. And basically what that means is, here's 100. If I'm going to win 100 or lose 100, so if I have 100, I don't even know how to explain this one. We'll get into it with money management. But it's 50%. So if we're thinking about that, in binary options, we have to be, worst case scenario, 60%. So we just lost 10%. So now we only have to be right 50% of the time. Now, saying that, what's important is that only pertains if every trade you take, your take profit is hit. If you're closing your trade early, your risk-reward ratio is now out of whack because you're not letting the trade run completely. That's why I didn't focus on this first. That's why I'm having y'all learn how to select take profit and stop loss. Forex does not work unless you can pick out the correct take profit and stop loss. So if you can't figure out how much price is going to move up and you keep missing it, so let's say you keep saying price is going to move up 10 pips, but it only moves 5, and then you have to be right. Okay, so you're always closing your trade at 5 pips instead of 10, but your stop losses, because like for this trade, you got nervous, you closed it out here. So I closed my trade here instead of letting it run. Now I only took 50% of my take profit. So what's that do is it puts us into a negative risk-reward ratio. So it gives us like 75% of the time we would have to be correct because we're not letting our take profit run. You could probably figure out a little bit. This is where people with Forex get into trouble because being able to enter the trade is great. Knowing how to get out of the trade is more important than being able to get in, and being able to accurately and consistently say, I'm going to hit 100% of this take profit, or I'm willing to lose the other half of it. So a 1 to 1 risk-reward ratio is your bare minimum. You will never, ever, ever drop below that. Some people are dumbasses and they do it, but then it puts you in a hole. Immediately you're going to be in a hole. Okay, so 1 to 1's great. Yay, now all of a sudden I'm down to I only need to be right 50% of the time. That's much better than binary options. But by getting that little bit of extra room, now you have to worry about exit. If I don't get exit right, that 50% ratio is out of whack and it won't matter anyway. And it's actually about 51% due to commission, maybe 52% that you have to be right on. But we can immediately put a dent in that. Anyone have a guess how we can make this even more favorable? What can we do with our risk-reward ratio to make it so we only have to be right 40% of the time or 30% of the time? And even if you get good at this later on in your life or career, you could get down to being right 25% of the time. So how can we make the chances of us not having to succeed as much better? What can we do with the risk-reward ratio so that it's the amount of times we have to put in a binary option term ITM or in the money? How many trades do we win? What can we do with risk-reward ratio to make it a little bit better? And I'm going to close this trade, and we'll take a look at that next. Correct, 2 to 1. So I just happen to have... You better work, you little piece of shit. Okay, it was working earlier, now it's not. Screw me. Let's go back. Okay, give me 1 second. 2 to 1, 3 to 1, yeah. Anything better than that. Now, on the 1 minute charts that I'm teaching y'all off of, and again, guys, just because I'm teaching on the 1 minute, this is to get the concepts down for Forex. I trade the 1 hour charts, the 15-minute charts, and the 1 minute charts. The way I'm teaching you is completely doable. It's saying my license check failed. Let me... Good lord. TR80 trading. Okay, so this one's set up with a risk reward of 2 to 1. Don't ask about the indicator. A friend of mine gave it to me so that I could show y'all proper here. Now, I picked a 12 pip, a 12.2 pip. Okay, whatever. It's a 12.2 pip stop loss. That means, since I'm going risk reward ratio, this is what, 24.4 pips. And that's a risk reward ratio of 2.0. 2.0 is my goal on most trades. I try and keep it that way. With 1 minute, it is extremely difficult. Let's just be clear on that. With the 1 minute charts, it is extremely difficult to always get a 2 to 1 risk reward ratio. I'm doing 1 minute. That's what I'm teaching everybody on 1 minute. 1 minute with Renko bars. Reason being for that is y'all get your repetition in. After that, you can drop the Renko bars. You can trade however you want. But it's just basically getting the basic Forex skills. A lot of people don't even know how to trade Forex. For instance, like risk reward, money management, take profit, stop loss. They didn't even know the terms. They were just focusing on bins. But again, since people asked me to expand, I did. The 1 minute system I've been using, I've been doing great on. So I figured that's an easy way to teach. And the rules on the 1 minute system are pretty easy to understand. Okay, and it's actually not even a 1 minute system. It's 1 minute for entry, and then Renko bars for any additional trades. So we're not even time-based, so you can't say it's really a 1 minute system. It's a 1 minute system for entry with Renko bars for re-entry, and we're using the two charts to confirm each other. Okay, so risk-reward ratio. We're at a 2 to 1, so that, just in case we understand, this is our stop loss, this is price, and this is take profit. I did a sell, so let's cancel that. This indicator's not liking me today. Or let's just do execute, see if it'll take it. Nope, it won't. It really doesn't love me. Risk percentage is at 2%. I'm not going to get into that one today. That's part of tomorrow. But this indicator hates me. But can everyone see here a 2 to 1 risk reward ratio? This stands for 2 to 1. How it looks on the chart now. So I think I can make this much, but I'm willing to lose this much. Yeah, the price, this thing isn't even moving anymore. Okay, so any questions on risk reward? Remember, I'm keeping this simple for today. Tomorrow's going to be money management. It's going to be a headache. Are there any questions on risk reward ratio? Let's see if I can get this bitch to kick in for a minute. Okay, so let's do a buy. Same concept. I'm willing. I think price is going to go, so execute. Okay, so this was, and just to cover it briefly, this was a 2% trade at risk-reward ratio 2 to 1. On a, what is this? This is a $50,000 demo account. 2% was, what, 9.37 lots. Look at the commission, negative $70 automatically. Just so you can see as things grow on your accounts. So you start off negative $70 in the hole as soon as this trade was opened. Now, here's my risk reward again. 12 pips down, 24 pips up. That's a 2 to 1. But I don't even have to be right 50% of the time. God, off the top of my head, I think it's 2 to 1. I'm out of it. Okay, so but does everyone understand then that none of this risk reward ratio will work unless you unless you let the trade run all the way. Again, if I close the trade halfway, that puts me back at a 50% risk reward ratio. Well, not even 50%. Or 1 to 1. Yeah, so you only have to be right 25% of the time, I guess. I think that's right. I'm so tired. So 33%, I'm sorry. Yeah, I think Vicky's right. 25%'s is a higher risk reward ratio. Sorry, I've been up since 4 a.m., so I've already been up 5 hours, and I only got 3 hours of sleep because I wanted to trade London. But it's important to realize this risk. I can't share that. It's something that a friend of mine gave me, and quite honestly, it's an expensive-ass indicator. I can give you the link to where you can look at it, but I'm not trying to sell anything. That's my point. It's a friend of mine gave it to me because he's actually one of the original Trading Access students, and he's moved on to Forex, and he made his own set of tools to do things like he wants. But he it's cool. I can't even figure out the math. I'm so out of it. But okay, Alan, get with me afterwards. I'm not trying to sell anything here, but if you want the link to it to take a look at it, it's like $100 and some though for the indicator, man. It does make life easy, but tomorrow after money management, I'll probably show you don't even need it. So we're going to look at calculators and things tomorrow on how to do it manually. And if you're still that lazy, go balls in and get it, man. But if you're not making money doing Forex, you're just practicing, I don't see the point in it yet. It's an excellent indicator, but if you're just practicing, no reason for it yet. Okay, so let's get back to my point. My point is, if you do not let your take profit run completely, your risk reward ratio is bullshit. Just because you're setting up a 2 to 1 risk reward, if you do not let the trade complete, it is no longer 2 to 1. Again, like I said, on the 1 minute, it is a bitch to get 2 to 1 all the time. But we do not want to ever drop below 1 to 1. The 1 to 1 keeps us slightly above 50%. It's like 51, 52 due to the commission. So we want always to be minimum of 1 to 1. And I'm lazy too, that's why I like the indicator, to be honest. But I'll show you. The 2% was my account value. This indicator did it for me. Tomorrow we're going to take a look at it and how to do that manually. And when I mean manual, you're not going to be using a calculator. You're just going to be punching it into a web page, and it tells you what to trade. It's actually, until you get to larger accounts, you can eyeball it. Like, if you have a $100 account, you can do 0.1 size trades. And when I mean 0.1, like this was 0.4. When I mean 0.1, like based off a $100 account, it's aggressive, but you could do 0.1. You could probably start off at 0.05. Until your account gets bigger, where it's going to be making a lot of money based off of a one, like if you're doing, this one was 9.37 lots, so up here it would have been 9.37. Until you have a larger account, we can eyeball it for the most part, and I'll give you the set of numbers for it tomorrow. What I'm trying to drill in today, though, is your risk-reward ratio has to be there. If you're closing your trades early, then you're either figuring out your take profit wrong. If you're hitting stop loss all the time, you're figuring out your stop loss wrong. This is all going to affect your risk reward ratio. A lot of you've had the TA since April, the FX portion of it, and you see I have not mentioned it. A couple of you called me out on it on risk reward ratio. Yes, it was out of whack, but I felt that I needed y'all to figure out take profit and stop loss first before I got into risk reward ratio and money management. Enough of y'all have been doing well enough, I guess, that you're starting to realize that the risk reward ratio, not the risk reward ratio, the money management was out of whack a little bit. So that's why we're going over it now. But some of y'all have enough experience and there's enough time. Plus I got in the questions I needed too, because I never know what questions I'm going to get. So does everyone understand risk reward ratio? It 1 to 1 minimum. If you can get anything better out of it, great. Risk reward directly affects your win ratio, or if we're going to talk about it like binary options, your ITM ratio. The bigger the risk reward, the less times you got to be right. Now, this is all sounding great. I know you're like, fuck yeah, this sounds so much easier than binary options. Your exit's what's going to bite you in the ass, guys and gals. That's what you need to. Binary options, if you're new to trading or you're still learning binary options, stick with the binary options. Go ahead and flip over to TAPFX on a day when it's shit. If we're in a big trend, do not trade trading axis. You can do pullbacks, but don't trade it. If we're in a heavy trend, you just stay out of it. A light to medium trend, we can do something with it. On a heavy trend, switch over to this in practice. On 1 minute charts, on a heavy trend, you're going to get a bunch of entries, and you're going to get the feeling of sitting there watching a trade that, here for instance, and I'm just going to do this as an example. Okay, so here's my take profit. And now you get to watch your trade go up to here, and you're like, holy shit, close, close, close. And it doesn't. It drops back down. This is what I'm getting feedback on, that people are losing their goddamn mind because price isn't getting up to here. And for 10 minutes, it could just slowly go up, 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 or it might go up to here and then drop down to your stop loss. Building up that confidence to sit there and just watch the trade is going to be nerve-wracking. I have no other way of saying it other than that. Some of you might enjoy it, but for the majority so far, the feedback I've been getting is that it's just nerve-wracking for you. And it's going to take practice. If you can get that down in... I haven't talked to them in about a week and a half. Last I heard, they had 3 good days, and then that was it. But they were not using the Rinko bars again. Don't know. It's been about a week and a half since I talked to them on it, and they were last I heard. Let's put it that way. Which, again, I didn't design it to trade bins, but they thought it would be a good thing to do. So I'm not going to tell people no if they want to try it. Okay, so to sum it up, risk-reward ratio equals ITM percentage. We never drop below 1 to 1. Whenever you open a trade, take profit and stop loss always goes in. You have quick deal for that. And let's go over here. So now that you understand why you have quick deal, remember this is what you use to determine take profit and stop loss. We're going to go over that tomorrow. Again with money management, but now maybe you understand a little bit better why we have these numbers up here. This is to help you practice in picking the correct take profit and stop loss. Again, on 1 minute, just so you don't feel bad if you have been trying this, because I have a couple people that have, on the 1 minute charts, it is going to be difficult sometime to land a perfect 2 to 1. That's our target. If you can get 2 to 1 almost every trade, you're going to be golden. I mean, hell, you can be wrong 66% of the time and still break even. But our goal for any trade is a minimum of 1 to 1 risk-reward ratio. Okay, do we have any questions on what we covered today? If you think of them, make sure you ask me before tomorrow, because tomorrow we're going to get into money management. Money management it's not complicated, it's just it's just covering all the information to do it. And here, I'll just show you. Risk size. It's nothing difficult that we're going to be going over tomorrow. Let me find my position size. There's one in my FX book. Okay, close. Hold on, I'm just closing the pop-up ad that comes. Okay, so what we're going to go over tomorrow is part of money management. I just don't want anyone freaking out. You can edit your take profit and stop loss at any time, yes. I use a trailing stop loss, actually, when I get into trades. So, but we'll get into that. We can cover that here in a minute. Just so you know, this isn't going to be too crazy. So let's say account currency USD, your account size is 1,000. Risk ratio 2%. And I'm wanting to do, so you dump in I'm going for a stop loss pips 12. Currency pair USD, calculate. So what I'm looking at is 0.167, so I just round that up to 0.17 lots. And I'm only risking $20. It's as simple as that. That's what you're looking at, and that's how you get your position size. Now, I can wing this through my head because it's a smaller account. Once you get to a bigger account, these tiny little points are going to be a big difference in money. Because the difference in 1 lot and 9 lots is huge. I mean, if we look over here, did it close? When we were up here, this was at $900 almost. Now we're down here, and it's down to $239 in profit. I'm sorry, $134.74. See how it's going away? Yeah, your max loss would be $20 off a 2% off a $1,000 account for the Euro USD with a 12 pip stop loss. And what you're doing is just making sure that those numbers jive. So I could say that I wanted to go 12 is about the biggest stop loss I'm going to see on a 1 minute chart. But let's say I'm going to go with a 5 pip stop loss. I can go 0.4 lots then. Yeah, that's about right. It's about $90 a pip, give or take. You'll get the idea once you've done these that you don't really need to do this all the time, because you're going to be able to figure it out. Like if I want to go 5% of 1,000, my max loss with a 5 pip, my maximum loss with a 5 pip stop loss, $50. And that's it, 5%. 5 pip stop loss, $1,000. So you can see, you'll get the idea how the money kind of converts in and out. It just takes a little bit of time and practice. God, I forgot. Someone asked, let me go through the questions because I had something. Okay, take profit can be manually edited. Yes. You see here's take profit, Steve? So remember I moved it? Let's say I want it up here. You don't want to do that. A good rule of thumb is once the trade is set, you deal with it. Unless you realize you made a horrendous mistake on figuring out the size. Not that you made bad judgment on a trade. If you made bad judgment on getting in the trade, you deal with it. If you made a horrendous mistake, let's say, oh shit, I just realized this is a bad trade. I don't do anything with it. The only thing I will do is I will do a trailing stop, and I'll do it for about 35, 40 points. That will put me a break even if price moves back up. That is the only, you don't change the stop loss, and the take profit stays the same. You need to learn to deal with your losses. Now later on that'll be different, but as of right now, if you're practicing this, you need it just to be set in stone, because if you develop the habit of dicking around with these lines, like let's say this is my stop loss, now price drops to right here, and I think, well, if this is just a little bit lower, then the price might move in my direction. It's the last thing you want to do. It will dick you, because that little bit lower was probably $500. So when you're dealing with a little bit of money, risk-reward ratio is all of a sudden out of back to, we just put it so we have to be about 75% right. So we don't want to mess with our risk-reward ratio. One, it gives us no way of tracking our trading. Two, it's just going to sink your account and burn it. If you can say, okay, I took a bad trade, I'm going to go ahead and put in the trailing stop to try and get it to break even, which will basically nullify the trade. But if it goes bad, then this trade becomes part of your statistics. So that was the out of 66% I needed wrong, that was part of it, or right. I'm sorry. Out of the 33% I needed right, that's one of my 66% that I did wrong. Why did I say 100? Because I want y'all to get the feeling for money management. This is a $50,000 account, demo account. Is that going to make it feel real for you? If I give you a $100 account and you need to pick out your trade sizes appropriately, it's going to force you, and you're going to see how that doing it wrong will drain an account extremely fast. The biggest thing I see that people do wrong is not letting the trades run and breathe. You need to get a feel for how quickly you can burn through the damn account. $100 is a size that you can see progress with, and you can also see 3 trades put a huge dent in it because you didn't use proper money management. If you go, so let's say for instance you figure out your money management wrong and you do 3 trades at 10%, your account's going to go from $100 to $70 in 3 trades. I want people to be able to see that. With a $50,000 account, they're like, screw it, even though it's demo. And because realistically, a lot of people are going to open up their Forex account with about $100. You don't have to be a millionaire to do Forex, and you can grow 100 in a couple months into a couple thousand. But I need people to get the feeling for trading with a size that's probably appropriate for what they're going to open the account with. Some people might open up with 200, some people might open up with 500, but the majority of people, they're going to do like 100 or 200 bucks once they're ready to go live. And that's good because you don't want to dump 5,000 in and then realize, hey, I'm still doing this wrong. So hopefully I drilled it in. Risk reward is your next step. Tomorrow we're going to cover money management, and that's going to kind of put the whole picture together. And then once money management's in there, I'm going to show you how I trade it. But this is kind of a step-by-step thing, because with Forex, I don't want to push people into it too quick. You need to basically learn the ins and outs of it. Okay, so the last thing I did, and someone just asked me, I used a trailing stop. How did I do that? I right-clicked here. For now, this is the one way I'm showing. I have it built in, but you can go to trailing stop. And remember I said pips and points are about the same? So 3.5 pips. So if price goes up 3.5 pips, my stop loss is going to jump to slightly above my buy order. Any other questions? Sorry, I didn't explain the trailing stop loss much. So, okay, it did just do it. See how it went 3.5 pips up. You see my stop loss jumped. So that is exactly what a trailing stop does. It's still slightly above it. And as price moves up, that's going to follow it up. That's not your ideal way to trade. That's in an emergency. That's the only thing I will do in an emergency. You see how the red line's following it up? This was our buy order. Now the red line jumped up a tiny bit more. It's a little bit above it. So now, pretending this was a bad trade, I've just saved my ass. I got out without a complete loss. This will basically nullify the trade. Or it'll make the loss so minimal that it's like 0.05% of my account or 0.005% of my account. So that's my emergency oh shit. I don't delete the trade because I want to learn from it. I don't close the trade immediately. I put in a trailing stop loss. For one, it's going to force you to deal with your loss. Dealing with your losses in Forex is going to be the biggest thing. Plus watching the trade go down and then up. You're going to have to learn how to watch a trade that was almost closed to drop down sometimes, then go up and close. Or sometimes you're going to watch a trade that was almost closed. You almost made your, whatever, $1,000, and it drops down and you lose to $500. So it's just getting used to it. Now, there's going to be, like Steve asked, there's going to be a few times, and I don't really want to get into it too much, but let's say we open this trade, and I'm going to draw an imaginary candle. I don't know, right here. We have a whole shit ton of candles, and this is the top. So I got into my trade here. I'm thinking, yay, great trade. Yes, we're going to get into leverage and margin calls tomorrow also. Today is just risk reward. Tomorrow's going to be the money side of it. Today is, I wanted people to understand risk reward. Okay, so there's the one time I will move my take profit, but I will also bring in my stop loss, is let's say I open up this trade, I see price go up, and then I look left and realize there's a huge resist right here. I will sometimes exit out of the trade early in profit. I try to avoid it, and if I'm doing my job by looking left before I get into a trade, I won't do that. But that's one of the few times I will adjust the take profit. Stop loss will stay the same, but take profit will get dropped down, and I know that goes against my risk reward. But if I can see that it's not going to break through here, then for instance news is coming, and I don't have time to wait for it to see if it's going to break through. News is coming, U.S. Bell's coming, end of the day is coming, or 11 o'clock my time or 12 o'clock Eastern time is coming, I'll start closing out trades because I know volume's going to drop off. Okay, any other questions? We showed quick deal. We got news in 5 minutes. What is it? Let's see, we got crude oil news in 5 minutes. So it's a good time to stop, break, and everything. Any questions, guys? Leverage, we'll talk about, like I said, we'll talk about that tomorrow. That's why I had on. There was some pretty specific instructions on how to open up the account to practice with. And if there are no questions, that is done for me today, man. I'm going to take a nap. I am not getting up for London tomorrow, so that way I'll be able to make sense while I'm talking, because money management is a little bit more of a... It takes a little more explanation, and I want to make sure and do it right. But if there's no questions, that is it for me. Let me stop the recording then.